In today's video, I'm going to talk about how you can sell your home tax-free. Now, this is a special tax break that the IRS offers to anyone who sells their principal residence. This is only for real estate that you own or occupy. And it's based on what they call the 2-year ownership and use rule. What that means is if you buy a home and own or occupy it for at least 2 years, you can sell the home, and as a single person, you can shield up to $250,000 in capital gains from paying any tax. So you could buy the home for $100,000, sell it at least 2 years later for $350,000 and pay zero capital gains tax. Capital gains tax is applied to any asset, long-term capital gains I should say, to any asset held longer than a year. And for most folks, it's going to be a 15% capital gains tax rate. I have the IRS tables here for 2019, and if you're single, if you make over $39,375, you fall into that 15% capital gains up to making $434,000 a year. Above that, if you earn more than that single, you pay 20% long-term capital gains. For a married couple, you can make up to $78,750 jointly, and you pay no capital gains. But if you fall between $78,751 and $488,000, you're going to be in that 15% capital gains tax rate. Above $488,000, 20%. But for most middle class families, you're going to fall into that 15% tax bracket. So you can own or occupy a home and sell it and pay no tax at all. Now, in my experience as an attorney, this is one of the best tax breaks out there. And that's because it's rare to have any gain be not taxable. And this capital gains tax exemption is current in 2019. When the tax reform was passed at the end of 2018, some people wondered if it would go away, but it still exists. So now you say to me, what if I'm married? So I mentioned those capital gains tax rates for married couples. If you're married, you can double that $250,000 exemption. You each get it. So if you own a home jointly as a married couple, you can sell it and shield up to $500,000 in capital gains. And I did some quick math here. Let's say you're in that 15% bracket and you're a single person and you own the home more than 2 years and you sell it at a $200,000 gain. At 15%, that would be $30,000 in capital gains tax you would otherwise owe. You can wipe that all away. The sale is tax-free. Married, let's say you double it to $400,000 at 15%, that's $60,000 tax-free. So the maximum for a single person would be if you owned a home and sold it for that more than $250,000 in gain, you could get $37,500 tax-free. And for a married couple, it would double to $75,000 at that 15% rate. If you're in the 20% bracket, it'll be higher. So again, the thing to focus on here is that you must own and or occupy the home for 2 years in order to qualify for this. And there's a special form you fill out suggested with the IRS when you sell the home. Your closing company, your title company should provide that form, but make sure if you're selling an owner-occupied house, you flag this for them so they include that form so you can correctly put this on your taxes. And watch my other video, I'll talk about exactly how you go through claiming this exemption or capital gains for the sale of your home. Now, you say to me, but what happens if I bought the home, I lived there for 2 years, and then I turned it into a rental. And I've been renting it out the last 2 years. But I moved across town to a bigger home. Well, there's a rule for that, and we call it the 2 out of the last 5 years test. So, if you did live in the home and it was your primary residence for 2 years out of the last 5, you can still qualify for the exemption. So if it's some situation where you moved out of the home but you did own or occupy it for at least 2 years, you need to have good records to show that was your primary residence for 2 years. But if it's within the last 5 years, you can still claim the exemption. So this is what the IRS calls the 2 out of the last 5 year rule. So again, it had to be your principal residence for those 2 years, and it must have been within the last 5 years before you sell it that it was your principal residence for the last 2 years. And because of that 2-year rule, you can only use this exemption once every 2 years. But for people who buy homes, fix them up, and flip them, sell them, every 2 years they can be doing this and claim the exemption. And as I pointed out in the previous figures, that is a lot of money you can shield from capital gains taxes and is one of the best tax breaks out there that I know of. So again, this is a way you can own or occupy your primary residence, sell the home for absolutely zero in capital gains tax. So thanks for watching, and we'll see you next time.